Hello friends, welcome to another video on technical analysis. So in this video we are going to talk about a very important thing that as a retail trader we must know, and we also must understand that how the big institution or the big traders are trading. Okay. In this video I am going to talk about the trading system or the trading psychology that I use behind my trades. Okay. And I'll also talk about the effective way of trading crude oil, okay, and how we can trade crude oil and how we can minimize our uh, stop losses, okay, and how we can take good trades. So actually I like to trade crude oil because I've been observing this crude oil for a very long time, and it is true that if you observe an instrument or a chart for a very long time, you will find that there are certain patterns. Those are repeating or those are forming where you will have an advantage to trade them again and again, right? So I find that crude oil is, like, for most of the people, it is quite unpredictable. But if you study the crude oil chart, it gives more clarity, more clarity on the movement as compared to other instruments. Okay, so I'll talk about the tools or the techniques or the strategy that you must use while trading crude oil. Okay. And before going into the video, I will also like to say you that as a retail trader, you should never trade based on assumptions, right? So say if you have done analysis overnight, okay, so if the market is closed now and you are doing analysis on crude oil, and you have found out the levels, like what is the support and resistance level or where the market is likely to head. Okay, so you should not trade based on the analysis, only on the analysis or the levels that you have found out. Okay, it is very important to have a trading system or a trading setup that you can use for your entry and exit. Okay, by saying that, I mean that, say if you think the price is going to go down and you have found some resistance and resistance zone, and you are willing to take a trade based on that resistance zone, right? So I would always recommend you to have a trading system or say a strategy where you will get entry based on your strategy, not based on the trading level that you have found out. Okay, so as a retail trader, we must always use a trading system or trading strategy that will always help you to get the proper entry or the proper exit. Okay, and let me tell you that most of the almost every institutions or the big players that are trading, they have a certain rules and guidelines, and they have a certain setup or the strategy that they are using on daily basis purpose. Okay, so I would also like to say that if you have a setup or a strategy that you are using, so do not think that that setup or the strategy will work on every instrument or on every time frame. Okay, so a setup, say let's say you have a strategy with a moving crossover strategy. Okay, so once you have, say, 20 SMA and 50 simple moving average, and you are using that as an entry for your trades, so you should not use that the same strategy on different instrument until unless you have back tested it or you have cross verified yourself. Okay, so every instrument has its own pattern or has its own way of movement. Okay, because if it was the case that every instrument or every script was moving in a similar way, then that would be a very easy task or a very easy setup to trade, right? If every instrument or every script was moving similarly, then it would be very easy to trade. So every setup or every instruments do not moves in a similar fashion. There will be some similarities, but you should not take that as an exact sign that instrument which is falling, it is likely to happen that the other instrument or say some similar instrument is also going to fall. So every instrument has its own participants, right? And every participant has their own trading system. So you cannot depend on a trading system or a strategy that will always work in different instrument or different market condition. What I have learned over the years, that until unless you have a strategy or you have a entry setup, then you are likely to make loss, because you will find that once you have found the resistance or the support zones, or where the daily range, okay, and you trade based on the daily range or the resistance and support, you will find that the support was acknowledged, or the resistance was acknowledged, but again the market started going in the same direction. Okay, so say if you have found a resistance that crude is going to have a resistance as $57, say, and when you see that the prices is moving ahead, moving towards the $57 mark, then you should never take a short trade based on the analysis that you have done, right? Because it may happen that the prices moved, or it pierced the $57 mark. Okay, it can broke out of that zone, and that will give you a loss, or your stop loss will be taken out. So I have learned over the years that we as a retail trader always try to catch the tops and the bottom. Okay, and that is a very bad strategy to think or to trade, because you should always remember one thing, that the market is not running, or market is not moving as per your analysis, right? It is moving as per the most of the participants are thinking, like what are the most of the participants or the big boys are thinking. And if you think, or if you have an analysis that you have done overnight, say today, as I said, today if the market is closed, I'm doing the analysis, I get levels, say the support resistance zone, or where a zone where the market is likely to reverse. So I should always wait for my strategy or my entry time frame to give me a signal, so that I can take the trade. Because once you have a setup or a strategy that you are using it every day, you will find you will always have a area, or you will always have a room to improve your strategy. You will always make improvements to your strategy, rather changing or shifting to new strategies. Okay, so I would also tell you that there is no strategy that is going to work for every time. But even if you get a strategy with a success rate of say 70 or 80%, that is more than enough, right? You would be making good trades. So there can be trades where you are going to make loss, but that does not mean that your strategy is wrong or your setup is wrong, right? So until unless you have a good setup or a good strategy that you can use for your entry signals, I would recommend you to make one. Okay, you can find, or you can analyze the chart for say over last 3 to 6 months, and you can find how the daily movements in crude are happening. Okay, or even if you're trading other instruments, you need to find out how the market is moving, or or you say if you find a pattern, and that is occurring very often, so you need to find out that pattern and trade based on that pattern. Okay, so let me tell you about myself. Like when I was trading earlier, like I was also doing the same thing as most of us are doing. I was not having a particular setup or a strategy that I was following. Okay, and every time I was searching the internet, or I was reading through books to find a strategy that is always going to make me money. Okay, and I was so obsessed, like um, I was so eager, I was so um, curious to find a strategy that is always going to work. But what I have learned over the years, that there is no one particular strategy or a setup that you are going to use, or that you will use in every instrument or in every market condition, and that will always make you money. Okay, so in this video, I'll talk about us the setup, or say the mindset of a genuine retail trader that should use, or that should have before entering the market. Okay, and say it is always good that you analyze the chart first. You find out the resistance or support zones or the key reversal points based on your say certain strategy or certain theories that you are going to use as part of analysis. It can be any strategy, or it can be any price movement, price action trading, or it can be indicator as well. But once you have found out the strategy, you need to stick to your setup or your sorry, if you once you have found out the analysis, you need to stick to your setup or the strategy that you are going to use as part of your entry, right? You should never short a running market that is moving upside, or you should never buy the lows unless you have a reversal point, or until unless you get a buy or a sell signal based on your setup and strategy. That is, let me tell you, that is the most disciplined way of trading a instrument, right? And even if you see most of the traders or the big institutions or the fund managers are using the same thing. They are not trading based on their analysis alone. Okay, they have the analysis, they do the analysis, they find out the market support and resistance area or the key reversal zone, and they wait for their setup or the strategy to give them a signal so that they can trade. So that's why you will always see that the price movement, like the market, there will be cases or there will be situations where the market was trading in a narrow range, and suddenly there was a breakout either to the upside or downside, and the movement was very quick. So the idea behind that is the most of the big institutions or the big traders, they wait for the market to show them something. Okay, they wait for the market to show them something so that they can take the trade. They are not going to take the trade based on their analysis alone. So we find that the market is moving suddenly down with a huge movement, and because the idea behind that is that most of the big traders or the big institutions, they take the trade based on their entry time frame or based on their signal, and they 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 enter late, but they enter hard. That means they wait for their setup to give them a signal based on their analysis, and once they get a signal, they enter the trade with a huge quantity. So it is always important to wait for the right setup or to wait for the right opportunities and then take the trade, because in that case, you will always find that you are achieving your target in very less time. So generally, I like to trade in the US market, okay, and I like to trade mostly in the US market and very few occasions in the London market. So I do not like the Asia session because that is quite unpredictable for me. And so I wait for the whole day movement to see how the market has behaved whole day. And then in the US session, I like to trade. So that will always give me an advantage of seeing how the patterns are forming or how the market has moved whole day. And once I find out some setups, or once I have analyzed the chart, I would wait for my setup or my signal to give me, or my strategy to give me a signal so that I can take the trade. Okay, so let's see this case as an example where I was analyzing the chart based on the Elliott wave theory. Okay, and at every point I've also marked the high volume nodes on each zone where the volume was high. So that will always give you advantage marking the support and the resistance zone. Okay, for that, for analyzing, for understanding this mechanism, you need to watch the video volume profile that I've uploaded. So once you watch that video, you will understand what I'm talking about, or how I'm using that setup to mark the support and resistance zone. Okay. So I like to use the Elliott wave analysis on the WTI chart or the crude oil chart, because I feel or I find that the patterns are forming quite clearly as compared to other instruments. Okay, maybe due to the huge volume, the patterns are forming clearly over this chart, and I have found that the same pattern is likely to repeat itself, or a same setup is likely to form every time on the crude oil chart. So it is very important that if you are a day trader, you stick to certain instrument that you will be trading on a daily purpose, on a daily basis, right? Because analyzing a particular instrument over a long period of time, you will find that you are quite you have quite you are quite benefit, like you are quite it is quite easy for you to trade that instrument. And once you have analyzed the chart for a long period of time for a particular instrument, you will always you will have a mindset where you can think ahead of the market, right? So even if, say, I feel that the crude oil is going to go down, that does not mean that at the opening of the market I'm going to short it, right? Because until unless I have a signal on my setup or my strategy, I am not going to take the trade. And even if my stop loss is getting hit for a particular trade, I would like to examine that trade once the market is closed and find out what went wrong. Because that way you are going to have an idea, or you are going to improve your setup or your strategy every time, right? That is the best way or the disciplined way to trade the market and improve yourself. Because until unless you have a particular setup or a particular system, you are not going to find out the key points that you are missing always. Okay, so that's the main reason that I like to trade in the London session or in the US session. Okay, because I see, or I can see what movement has happened over the last few hours, or say after the market was opened. And based on that, I'll find out the resistance, intraday movements, or the price levels. And once I found out that, I will wait for my setup or my entry time frame to give me some kind of signal, so that I can take the trade. Believe me, that is the as I said, that is the most efficient way to trade the market. Because the big institutions or the big firms, they do not try to catch the highs and or the lows. They always try to take the trade based on some kind of confirmation, and that is why they make the money, and we as a retail trader lose the money, because we are always trying to catch the highs or the lows, or we force our analysis on the market. Okay, so we should never force the analysis that we have done over the market, because we are not moving the market, right? The market is moving you. That means once you find out that, okay, so I say I have over analyzed the chart, and I'm saying that there will be a volatility in the market today, and there can be a sell-off in the market. So that does not mean that once the market is open, I'm going to short it. Right? I should always wait patiently for my setup or my signal, or my strategy to give me a signal, and based on that I will take the trade, right? So let's see this example. I was in one of the video, I was calculating, I was marking the Elliott wave count on this chart, and we were at this point, this triangle was forming. So I also told that in that video that once the price is going below this level, it is likely to fall more, or a set of new 5 waves is going to form. So that does not mean that I'm going to short at this point. My strategy, or my analysis may be wrong, but once I have combined my analysis with my strategy or with my setup, then the probability will be high to make a good trade, right? So at this point, the market opened, say at this point, let me mark over you. Okay, so it was 3:30. So the market opened at this point, and I was seeing the day movement, how the market was moving. So it was forming a triangle. And I was thinking that once the market has broken out of the triangle, there would be a retest. And once the retest has happened, or once I get a short signal on my setup or my strategy, I'm going to take this trade. So it should never be the case that you are trying to catch the highs, okay, for this short trade, because it may happen that the market has found a bottom over at this point, and the market is likely to head up. So always combine your analysis with your strategy or with your setup. Okay, you always mark the resistance and the support zone or the key reversal area on the chart, and wait for the price to acknowledge and show you something that will allow you to take the trade, rather forcing your analysis on the market. Okay, and that is one of the, like, that is the reason only, it can be the only reason that most of the retail traders are failing in this market, right? Because they do not have a particular setup or a strategy that they are using, and they are improving that strategy or setup, instead of, like, they are moving to some other. Every time they find a strategy or a setup is not working, they move to a new strategy or setup. Believe me, this is not going to work. Okay, it will happen that down the line, say after 4 or 5 years, even that, at that point of time, you are only finding a new strategy that will help you make the money. But that is not going to happen, right? You have to find out a strategy. It can be a simple strategy or it can be a complex strategy. It can either be a moving average crossover, or it can be any kind of indicator that will give you a sell signal or a buy signal. Okay, so that will always give you a discipline. Okay, the discipline will come you if you are following a particular strategy or a setup. Okay, and we say for most of the retail traders that we are not disciplined, right? Even I was not disciplined many years ago. When I was trading the market, I was seeing, I was waiting for the market to open, and as soon as the market opened, I did my analysis in the previous night, and I was waiting for the market to open so that I can take the trade, right? That has always made me a loss, because sometimes my analysis was correct, and sometimes my analysis was wrong, and I was taking the trades based on my analysis alone, not following a setup or a strategy that I should follow, right? So it was a lesson learned for me over the years, and I have found strategies or setup that I generally like to use on a daily basis, and I make the trades based on that, right? So if you are a very new trader, the first thing you can do is you can track the market. You can track a particular instrument, okay, and see how the patterns are forming or how the market is moving. So once you have started analyzing the chart, say for the last 6 to 3 months, okay, you have analyzed the chart, you have found that once this pattern or this area is or this setup is forming on a chart, then the market is likely to go or move that way, okay. And once you have found that is setup or a pattern that is forming on the chart, so you should also have a strategy which you can use, or which will give you a signal so that you can enter the setup or enter the trade. And nowadays there are many people, or there are many person, or there are many advisors who are claiming to give a setup that will work or that will generate a profit 90% of the time, or even 95% of the time. But let me tell you, that's not true. Okay, if I find a setup that is always working, say in for a natural gas, okay, and if I'm trading natural gas, and if I find that a particular strategy is always working, say in the London market or the London session, that then I will find myself that if I trade based on the strategy in US market, then the strategy may fail, right? So the key learning for this video is that there will be there you cannot find a strategy or a setup that is always going to give you a profit in each and every instrument or on different market condition. Okay, the strategy needs to be categorized based on the market condition or on the instruments. Okay, and once you have created your strategy, the next point is to wait for the market to show you something or to give you a signal based on your strategy or setup. Okay, and and it is always important to analyze your trades at the end of the market. Okay, even if you have made a loss, or if you have made profit, it is very important that you keep a general for your trade, or you write down your trades on some on some copy, okay, so that you can analyze the trade every time you find some you will be able to find the mistakes that you are doing over the trades. Okay, and that is the same thing that I have followed over the years. Like I was also trading on the random levels, or say at the market opening. Okay, and I was never able to make a particular setup or strategy, because I was not knowing the importance of having a setup or a strategy. Okay, and once I started following the good traders, I found that they are always using a particular strategy or a setup that they use to get the entry or the exit in the market. Okay, so forcing your analysis on the market is completely wrong. You find that I have also seen that people who are providing the levels like before the market opening. Okay, they say that the market is likely to reverse from this point, or they give a short trade based on their analysis, but that is a completely wrong way. Okay, once you have marked the levels on your chart, you should wait for the price to to acknowledge that area, or to give you some signal where you can see that the reversal has happened. Okay, you need a confirmation. You cannot take the trade based on your analysis alone. Okay, and so I was analyzing this crude oil chart, and as I told you that this is the pattern that is forming on the crude oil chart again and again. So we were at this point, and as I said, once we go below this point, there will be a new wave that would form. Okay, so this was my whole analysis on the recent movement on crude oil chart. So let me go to some higher frame so that you can see. Okay. So even for this case, I was, let me, so we had this gap up opening followed by this retest of the top, and the market started going down. So that does not mean that I'm going to short the rallies, right? Because I do not know where the market is likely to head, or even if the momentum is quite high, or the market participants are thinking that the price is likely to go up based on the market condition, then I should never short a market rally, right? So most of the traders fail to make money in this market because they are always trying to catch the tops and the bottom. Okay. Believe me, if you are going to do it that way, it will never make you money. Okay. You will find that most of the trades you are getting stopped out. Okay. And for some cases, you might even get a top or a bottom, but that does not mean your approach is right. Okay. So for this case, I was seeing that the market was going up, followed by this correction, and I was waiting for the market to show me something, right? So once I see that the market is forming a triangle pattern at this point, which I've already shown you on one of my video. So I will be waiting for the market to show me something so that I can take the trade, right? I will never take a trade based um, on the high, or say the market was going up, and I will never try to short it until unless the market has given me some hints, or I get a signal on my strategy or my setup. So as you can see over here, the market went down, followed by the retest of this line, okay, the lower edge of the line, and the market started going down. So once we see this fall, like most of the traders will try to catch the bottom, right? Generally this happens. Like if you see the market, say the crude oil has fallen 200 points, then mentality of the most of the traders are going to change. They will think that they are going to buy the lows, and there will be some upside movement so that they can book some profit. But once those kind of movement happens, it is very likely that the movement will continue till the end of the night. Okay, and you may never see some reversal or some retracement. So it will basically, the reversal or say the retracement will depend on the volume profile of this candle, right? As I have already talked on one of my video. So if you find that the volume is very less, and if the market has already fallen, and if in US session we find some signal, or or some setup at this point, then we can take a reversal trade, um, just only for the retracement of this movement. Okay, so that is basically a day trading that is used for day trading purpose. And so the most important thing that is to have a particular setup or a system that you will use every time you are going to take a trade, right? So, and even for this case, if you see, I have marked the counts over there, okay, for this, because I have been shorting at this point, and every day I'm only selling. I'm not buying the market. Whatever be the low or whatever be the new low, I'm not going to buy the lows, because I know the trend is down, because it was falling very quick, and um, it is not wise to take trades based on your emotions, right? Even if you feel that the market has, okay, sorry, actually this one is this fourth wave will be here, because this one is a triangle pattern, and there is alternation between wave 4 and wave 2. So I see this as a flat correction, because it is 1 2 3 1 2 3, and then 1 2 3 4 5. So this was a complete move for the first leg. So I can mark this as a 5-leg down move, right? So 1 2 3, then 4, then 5. And once this has formed, I see this as a um, this as a wave 2 of this higher frame. So as you know, Elliott wave is a fractal in nature. That means a wave, a 5-wave move on a lower frame, or say a complete cycle on a lower frame, will be forming as a wave 1 and wave 2 on a higher time frame. So that is the fractal nature of Elliott wave. That means a pattern that is forming on a lower frame can form on a higher frame. So if you get a complete Elliott wave cycle on a lower frame, then once you switch to a higher frame, you will find that it was the first wave and the second wave of a higher frame. That is likely to happen in most of the cases. Okay, so once this was a zigzag correction actually, and so it was wave 5 completed. This was a wave 2 of this higher cycle, or the bigger cycle, and again the market started going down. So this was actually a triangle, expanding triangle, or you can say a leading diagonal. Okay, so I'll talk about these things in one of my video. Okay, so if you see, this was actually a triangle pattern, right? Okay, so it was wave 1, wave 2, wave 3, then wave 4, and then wave 5. So let me draw this one for you so that you have a better understanding. Right. So I'll mark this as A, B, then C, then D, then E. This one is actually a first wave of Elliott wave can also form of a triangle. That thing we'll talk about, okay, later in the later on videos. So let me mark this one first. This was A, this was B, this was C, this was D, and this was E, right? And if you see, the point E has broken out of this line, okay, or this lower line, and that is most likely to happen in most of the cases where buyers who are going to buy at this point, thinking that their analysis is correct and the market is likely to reverse from this point, they will find that they are getting stopped out. And once they are stopped out, the market is likely to move as per the analysis. So it is very important that you have a setup or a strategy at this point, so that once you get a signal, you are going to take the trade, right? Instead of believing your analysis as exact science, and you will always find a situation where after your stop loss has been taken out, the market was moving as per your analysis, right? This situation can only be avoided if you have a strategy or a setup in place or a system in place where you will get a signal to take your trade, right? So it was wave one, A, B, C, D, E, or you can say a triangle followed by this wave two. So I can do, I will mark this one. Okay, let me mark this one first. So it is wave one, this is wave two, this is wave, this is wave one, this is wave two, and it was all wave three, which was subdivided into 5 waves. Okay. So the third wave was actually subdivided into 5 waves, which I've already talked about this wave structure in one of the video. So if you see, it was wave one, wave two, wave three, wave four, and then wave five. So it was subdivided into 5 waves, right? And okay, so okay, let me mark this one. Let me go to higher frame. Okay. So I'll mark this one as 1, this one as 2. So it was 1, 2, 1, 2, 3, 4, 5. So we have 1, 2, 3, 4, 5. So I'll mark this one as, say, 3, right? 1 minute. Just a moment, let me see. Okay, 1, 2, 3, 4, 5. Okay, 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5. Okay, so this was actually, if you see the wave count, it was 1, then it was 2, then this was actually 3, this was 4, and this was 5. So the third wave was also subdivided into 3 waves. If you see, wave 1, then wave 2, then wave 3, then wave 4, and this is a wave 5, the last this move. So this one is actually wave 1, wave 2, wave 1, wave 2, wave 3, wave 4, and wave 5. This completes the full leg of the first subwave of the third wave. As I said, the third wave can be subdivided into 5 waves. So Elliott wave is actually, if you practice more and more, you will get a better idea and how the markets are forming the Elliott wave. You will be able to count the wave count properly once you have practiced this a lot. Okay, so this was wave 1. This was actually wave 2. This was a zigzag pattern. Okay, and this was wave 3, and this was this triangle pattern as wave 4, and the last leg was wave 5. So the third wave also subdivided into 5 waves, right? And we have this flat correction forming as part of the fourth wave of the bigger cycle. So if you see the bigger cycle, it was a zigzag pattern, and we have this flat correction or a triangle pattern that is forming as part of the wave 4 of this bigger cycle. So the bigger cycle, if you see, we have this bigger cycle from here, right? So wave 1, this is wave 1, this is wave 2, and this is wave 3. So we are in the wave 4. Okay, and so if you see, this is a triangle pattern actually, and we are in the wave 4, and we'll see whether we are going to have a wave 5 or not. Okay, or flat correction based on this wave 3. The market, if the market is it is going to go up, it will form a flat correction, right? So this one was as part of wave 3, and we are in the triangle pattern actually, and we'll see if we get a sell signal at this point, then the market is likely to go below this level to complete the wave 5. Okay, and as I said, if you watch the trading with triangle pattern, then I've always said over there that once you find the point A, sorry, this point A, this point B, and this point C, you will draw the channel based on the points, right? Right. So let me delete this one. Okay. So if I mark, say if I'm marking this triangle pattern as A, then and this is B, then this is C, and this is D, and this one is E, right? Actually, I need to study this movement to see whether this was a this I have marked this ABCD correctly or not. I need to go to the lower time frame to see the entire movement of this leg on a lower time frame. And if I find that the move was a 3-leg move for each case, then I will be marking this wave count correctly for this one. As if you watch that video, I've explained you how to mark the ABCD pattern correctly. Okay, and for this case, if I see there was just double top forming and this 5-leg down movement, and this completes the 5th or the leg E of this triangle pattern. Okay, so I see this market was going down followed by this retracement. Okay, and if my wave count is correct, then the market will likely to go down again. But that does not mean that I'm going to take a trade based on the analysis alone, right? I need to wait for my strategy or my setup to give me some sell signal so that I can take at this point and I can write this downtrend if it is going to happen, right? So forcing your analysis on the charts or treating your analysis as exact science is totally a mistake. And if you are doing this mistake, I would strongly recommend you to stop that one, because that is never going to help you, or that is never going to help you to improve your trading skill. Okay. So that's all for this video. Okay, we'll see how the market has moved at this point. Okay, and if I see this, if I get a double top, and or say if I get a signal, a sell signal at somewhere at this point, or in the Asia or the London session, then I will the London and the US session, I am going to take the short trade. Okay. So, and for the volume profile, I would like to use the volume profile to find out the resistance or the support zone for this movement, because this was, if my count is correct, then this was the last leg, right, leg E of this triangle, and I will find out the volume profile of this move to see where the most of the volume was taking place. So, because if you see that the traders or the big institution, they cannot, or uh, they will never take, or they will never dump the position, uh, their entire position on a particular level, right? Because if they do, if they are doing that way, the market is likely to fall quick. So say I have 1 million contracts of crude oil and I need to exit of the position, right? And if I start uh, exiting my position, then the market is likely to fall very quick. Okay, and that is bad for business. Like that is not a good move for myself, because I would be exiting my positions on a very low level, right? Say I have a buy position of 1 million contracts and I need to exit those because I need to book the profit. And if I start dumping my position, then the market is likely to fall very quick. So what I will do is I will exit my position in a block of say 100k contracts, right? And I will wait for the market to retrace or to retest the levels where I've exited, and I will start dumping the position again. So we often see that there were very sudden quick fall or sudden spike to the upside, and once that has formed, the market is likely to correct itself. So that is actually the opportunity for the big institution to enter the market again, right? So we'll talk about those things in detail in the upcoming video, because it is very important to understand the psychology of the big institution or the big traders, right? Okay, so that's all for this video. Hope you have liked the video. I'll be making a follow-up video on this elite wave count. So stay tuned. Okay, and let me know in the comment section if you have any suggestions. Okay, so have a good day. Happy trading and bye.